everyone, it's Janine here, and today I'm here to talk to you about what you can claim if you're self-employed for tax purposes. A lot of people have a side hustle or part-time business income or are completely self-employed and are confused as to what they're able to claim on their tax return when it comes time to file. I'm here to help you make sure you get the maximum amount of deductions that you can take while still staying on the right side of the law. First, you're going to want to make sure that you're filling out the self-employed schedule, and this is found in your tax return on Schedule 2125. In this schedule, you'll be able to fill out all of the income that you earned during the year, and this is incredibly important. You need to make sure that you're claiming all of it, and you need to make sure that you have record of all of the revenue that has come into your business. So sending invoices is a good habit to get into. As you scroll down, you'll see that you hit the expenses section, and this is the area that you want to include all of the expenses that you incurred as a business owner in order to make income. It's important to note that these expenses do have to be incurred to make business income, and you can't just include personal expenses in here. So if you are spending advertising dollars or dollars on employees or supplies, these would all go in this category. And there's a complete list on this form that CRA has provided, and I'll provide the link below in the comment section. Meals and entertainment is always a section that we get a lot of questions on, so I wanted to take a minute to address that. Meals and entertainment can be included on your tax return, but only 50% is deductible. In addition to this, these expenses do have to be incurred for business purposes. So if you're going for lunch with a girlfriend and you have a self-employed business, unfortunately, this is something that you're not going to be able to include on your tax return. CRA is always looking at a reasonableness test, and so if it wasn't incurred to earn any business income, if you're going out for lunch with your mom or a friend and grabbing a glass of wine, that probably isn't an appropriate business expense. That being said, if you're actually on a lunch with someone that you do business with, 50% of it will be deductible. Home office is an area that we get a lot of questions about, and the home office is partially deductible if you spend more than 50% of your time in your home office to earn business income. If you meet this test, then you'll need to calculate what portion of your home you use to earn that business income in your office. So the best way to do this is to actually measure the square footage of your house and then calculate the square footage as a percentage of the room or space that you use. Again, CRA is going to look at a reasonableness test, and so if you're including 90% of your home, that probably isn't appropriate. And this applies to things like cell phones as well. No one ever uses 100% of their cell phone for business, and so if you're paying for your cell phone out of pocket, you're going to want to prorate that as a portion of business and personal expenses. The last area that we get a lot of questions about is the vehicle expense, and this is again going to be a portion for business and a portion for personal. So there is a schedule on your tax return that will allow you to calculate this amount, and it's really important that you're writing down your kilometer logs that you use your vehicle for earning business income versus the kilometers that are driven for personal. Another way to do this as opposed to a pen and paper is through an app, and I'll link a couple options in the comments section below. At the end of the day, CRA is again coming back to that reasonableness test and wants to make sure that taxpayers aren't taking too many deductions. If you have the receipts to back up your claims and the amounts that you're claiming seem reasonable, such as maybe 50% of your phone or 20% of your home as home office, then likely things are going to be a-okay if CRA ever looks into you. It's really when you push the boundaries and try to claim as much as you possibly can that you can get in trouble. And we really do want to avoid that because it can be an incredible headache for the taxpayer having to prove out every line of their tax return. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. And if you have any questions about what you can claim as a self-employed person, please leave them in the comment section below. I'll see you next week.